The latest edition of IQ magazine includes a series of articles exploring the evolution of sustainable finance and the role derivatives markets will play in supporting the transition to a green economy. Countries around the world have set ambitious targets to reduce emissions and accelerate the pace of this transition. We've already seen some big developments in recent months, from the European Union, where 225 billion euros of green bonds are set to be issued as part of the coronavirus recovery package, to the US, where climate change has already been set at the heart of the Biden administration's agenda. So what does all this mean for derivatives markets? And how will ISDA's agenda adjust in the coming years to reflect the rapid growth of sustainable finance? With me to discuss this is Steve Kennedy, ISDA's Global Head of Public Policy. Steve, thanks very much for joining me.
Thanks, Joel.
So Steve, what role will derivatives markets play in the transition towards net zero emissions?
As we know, a tremendous amount of capital, a tremendous amount of financing is needed to support the transition to a sustainable economy. The issuers and investors involved in the market are going to need to risk manage their positions. Hence, there's a very important role for derivatives in the traditional sense in terms of managing interest rate risk. There's also a role, however, for other types of derivatives, which we're seeing develop. For instance, we've seen a range of what we call sustainability-linked derivatives, in which the floating rate payment from a counterparty is linked to a KPI, a sustainability metric, in which their payment goes up or down depending on how well they do against that metric. We're also seeing products like virtual power purchase agreements, which provide a steady flow of financing to green energy providers. So I think we're at the beginning of this path towards figuring out how derivatives are going to contribute to sustainable finance, but the role should be significant.
And turning to the role that ISDA will play, ISDA surveyed its membership in late 2020 to identify their priorities in this area. What were the key findings of that survey, and how will ISDA's policy agenda adjust to reflect that?
I think what we're hearing from members is standardization, standardization, standardization. That's what they need in the marketplace, and that's what they look to us for traditionally over the years. And when we talk about standardization, what specifically do we mean? We mean standardization of disclosure practices. What do firms have to disclose? How do they disclose it? What metrics do they use? When it comes to KPIs, perhaps for sustainability-linked derivatives, what KPIs should be used? How can that be standardized? When it comes to documenting new types of derivatives transactions that contribute to sustainable finance, do we need to standardize definitions and legal language to support that? So I think in a variety of different ways, standardization is the key theme. There are other themes that we're hearing. First of all, as we know, there's a tremendous desire for information. This change is so broad-based and it's moving along so rapidly that it's hard for members to keep up with it. And they look to us to help them sort through that, particularly as the sustainable finance trend becomes bigger in the United States, as it looks like it will after the presidential election. There's a risk and capital demand as well. Policymakers are looking to incorporate climate finance and risk models. Members are as well, so they'll be working that area.
And finally, on February 18th, ISDA and a group of trade associations published the principles for a US transition to a sustainable, low-carbon economy. What would you say is the significance of those principles in supporting the transition?
I think anytime you can get 12 of the leading global financial trade associations to agree on something, that it signals something important, and particularly so given the topic of sustainable finance. What we have here is the leading trade associations around the world coming together to outline their principles for how they can support, for how they think and how they can support the role of finance in the move to sustainable economy, and that's important.
Well, thank you, Steve. The latest edition of IQ features a package of articles on this topic, including an interview with Bob Litterman, founding partner at Kapos Capital and chair of the climate-related market risk subcommittee of the CFTC's Market Risk Advisory Committee. IQ is free to download on the ISDA website at isda.org. Thank you.